Greetings, Dwayne here, CFRN. We're going to recap Friday the 13th, 2012. This is the S&P 500 Emini futures. We're looking at a daily chart right now. A couple days ago on the recap and on the radio program and in the live trading room, and on the blog. I may have even called my mom, I don't know. I said, we have something we've not had in months, since December. I said we have a sell signal on a daily chart. And I showed you exactly where the entry for that trade was from a daily perspective. Well, that's a nice crooked line. Let's see if we can do better than that. Okay. Alright, that's not quite it, but it's pretty close. Yeah, there we go. Like 1384. Okay. Now, the low on Friday oh my goodness, come on. The low on Friday was 63.75. So from 84 to 63.75, we'll call that 64. Okay. 20-point drop so far. Probably doesn't look like 20 points because it's a daily chart. We can make it stand tall and scale it out and all that good stuff. Okay. Now, when we had the bearish cross here, we knew the setup was in play. All we needed to do was pull back to the trigger line. Okay, we can see this a little better now. There was a trigger. Trigger was 82, not 84. So it wasn't really 20 points. It was more like an 18-point drop. Okay. Price pulled back, made the drop. Where should we go to next? Well, this looks like a good spot if the downside momentum continues. Okay, just looking left, not a very straight line, but you get the idea. Below that, why not here? These are realistic targets. These have nothing to do with the weekly trading zones as much as they do simple support. On the way up, price pulled back to this spot right here, found support, took off. Okay. On this pullback, we found support, took off. So as price drops to here, would we expect to get at least a little support? Yeah, we would. Will it hold? Will it bounce? We'll have to see. Okay. I just wanted to point out that on the daily setup, it's everything I've been showing you on the smaller time frame setup, just in a larger time frame. When we tell you that what we do works across multiple markets, multiple time frames, whether you're using it on a 1-minute chart, a 233-tick chart, a 4-tick range chart, a 500 contract chart, a weekly chart, a quarterly chart, or an annual chart, it's the same. The market is fractal. Okay? So what we do works well in all markets and all time frames. Okay? And this was a beautiful example, and it's been months since we've had this opportunity, so I'm really excited. Okay. Alright. You know the drill. We're going to do it. We left off Thursday night at midnight, as I recall. So now we're going to do Friday in this time frame, as we've been doing this whole series. Got to go back to midnight, Friday the 13th. Okay. Let me put in a vertical line, make it easier for you to see. April the 13th. Okay. April the 13th, we get a bearish cross. Price pulls back to right there. Okay. The entry was 1383 and a quarter. Price dropped to 1377. I'm using my weekly trading zone horizontal line tool to simply highlight the price. Those are not actual weekly trading zones. So 83.25 minus 77, 6 1/4 point drop. $6.25. Okay. What happened next? What happened next was price pulled back here, creating a short entry. Which, to call it anything more than a stop would not be realistic. So we'll just call it a stop. Okay. Price rallies. We get a bullish cross. Price pulls back. We get an entry. You get stopped out. Man, isn't there some way to prevent that? Well, since you asked, this pullback here, see how price never paused, not even for a moment? It just slashed right through this thing. Just boom. Okay. Let me show you something else. See this down here? Now, Michael can explain this to you a lot better. If you drop into the live trading room, he'll be happy to. Okay, what we have here is bearish divergence. I'm not going to go into a long explanation. I'm just going to say that we had a very high momentum down candle. We have bearish momentum. If you understand what's going on here, how our indicators work, how we use them, then there's a really good chance that you'd have said, that's not an ideal spot for me to be going long. I think I'm going to pass. Okay. But for the sake of what we're doing here right now, we're just going to call it a stop out. Okay. Bearish divergence would have said you don't want to try to go long here. So there, if you'd been in the live trading room with us, or this was before the market opened, but we have some guys that get together and trade before the market opens. So, but again, I'm calling it a stop, even though you could have avoided even taking the trade. All right, bearish cross. Okay, pullback. The pullback entry is 1380 and a quarter. Price drops to 75.75. So let's go 1380 and a quarter minus 1375.75, 4.5 point drop. Okay. Yeah, let me move this over here. There you go. Now, this could get really boring really quick because we had a trend down day. But I'm going to show them to you. I'm just going to move through them quickly. The next pullback entry would have been right there. 78.25, and that little drop was to 76, so that would be 2.25. That's maximum potential. Can you take 2.25 points out of a 2.25 point move? Well, it's pretty hard. We've had that discussion. Okay, I better put some arrows up or we'll get lost. Okay, that was a 4.5 point move. This was a 2.25 point move. Okay, price pulls back, gives us another entry right there. All the time we got bearish divergence. Okay. This time price drops to, let's get our entry right there. Oh, come on. There we go. Alright, the entry is at 78. 1378 minus 1373.25. 4.75. $4.75. Okay. Next entry. Right here. $75.50. 1375.50. And price drops to 1370. So that's going to be a 5.5 point drop. 5.5 from here to here. Okay, and it's all of 9:30 Chicago time, 10:30 Eastern. Next pullback is right here. Entry there. 1372. Price drops to 1368.25. So let's go 72 minus 68.25, 3.75. 3.75. Okay, our next pullback entry is right here. Now this one gets a little tricky, doesn't it? Entry is going to be here at 71. But how much drawdown did we have? Remember, we only allow for 2 points of drawdown. Anything more than 2 points, we get stopped out. The drawdown was 1372. There was 1 point of drawdown on the trade. Here, pulled back 1 point, and then price dropped to 69. Maximum potential of that trade, 2 points. Okay. Okay, this is not really a good setup here to go short. Number one, you got bullish divergence telling you want to be long. Here, this is a continuation, but you really had no air, you had no space. But for argument's sake, because I like to argue. No, I really don't. I despise it. Let's call it a stop out. This got stopped out. That's part of trading. That's what happens. Sometimes you get stopped out. Okay, now you get a bullish cross. Okay. Looking for price to pull back and give us a long entry. It does right there. Okay. Bullish cross, pullback. The pullback's to 1371.75 and price pushes up to 74.50. Okay. It pulls back here. We do have a drawdown on the trade from 71.75 to 70.50. You had a 1 1/4 point drawdown on the trade. Okay, you're still in the trade because we risked 2 points on this setup. Now let's say 74.50 minus 71.75, 2.75. 2.75. Okay. And it's now 12 o'clock Chicago time. A lot of folks would be done at this point. 4, 6, 10, 15, 18, 20. 20 points in this stretch here before you get stopped out. That's a nice run from the opening bell at 8:30. Just before the opening. Yep. Yeah, this set up like one candle before the opening bell. Looks like, no. Take that back. About 25 minutes, 35 minutes before the opening bell. Okay. Well, unless you entered on this one. Anyway, you get my point. All right. So now what happens? We had a pullback entry here. Took a while, but it finally gave us 2 3/4 points on the upside. Price pulls back. After it gives us 2.75, price pulls back to here. Okay. 72.50. Now there's a drawdown to 70.50. 72.50 to 70.50. What do we say? We always risk 2 points on one of these trade setups, right? Where was the entry? Right there. And what happened? Stopped out to the tick. Okay. Now, do we have other tools, other indicators, other ways that you might have not been in that trade? Yeah, but let's be realistic. Fair enough. Okay, so you get stopped out on that trade. You go long, the market doesn't. Stops you out to the tick. Actually, the market does go long. It actually moves up to 74. So there was actually a 1.5 in that trade if you had been in the trade, but you weren't because you got stopped out. Okay. All right. So you get a bearish cross, but there's never any entry because there's not even a hint of any place where you, based on our setup, would be taking a short position here because there is never pull away. You cannot have a pull back until there is first a pull away. Okay. So over here we get a little bit of a bullish cross, but again we never get any kind of a pull away to get a pull back to get any kind of a trade. So there's no trade in here. Okay. There's just nothing. Now we get a bearish cross here. We need a pullback to get short. The pullback entry is right here. I know you missed all of this. Is there a way that you could have taken advantage of that? Sure. Come take the free trial, become a partner, we'll teach you. Okay? cfrn.net/apply. That's how you take the free trial. Okay, the pullback was to 67. Price dropped to 63.75. 3.25. Okay, now that is every single trade setup that happened on Friday the 13th from midnight Chicago time until the markets closed Friday afternoon at 3:15 Chicago time. Okay? Alright, now we're gonna walk through the entire day, just like we did in the last video. We're gonna count how many times we would have been stopped out. There's 1. There's 2. There's 3. And there's 4. All the way back to midnight. See that? April the 13th, midnight Chicago time. 1, 2, 3, 4. Okay. Now, this is the most liquid market in the world. We got stopped out 4 times based just on the trade setups. Okay. Times 2 points. That's 8 points. Now, it's unusual to encounter slippage in this market. Not impossible. It can happen. It does happen. So, let's say you had to take a slip on each one of those trades. Okay, there were 4 stop outs. If you got a tick of slip on each one, that would make another point. So, although 4 times 2 equals 8, we'll go ahead and call it 9 points stopped out, because you might have got slipped a little bit. Okay. Four trades stopped at 2 points each. Oh, come down. How's that? 4 trades stopped at 2 points each. With our fancy math, 4 times 2, we're going to call it 9. Alright? Okay. Oh, and I forgot to put an arrow on this trade. This is where the entry was. And yes, there was a couple, 3 ticks of drawdown on that trade. Okay. 3.25 plus 2.75 plus 2 plus 3.75 plus 5.5 4.75 2.25 4.5 the last one 6.25. So all of that, if you were following along with your own calculator, the maximum potential was 35 points. That means if you were there for every single trade, you took every single trade, and you milked it for every tick possible. Now, here's the thing. That's where an awful lot of websites just kind of leave it hanging. Yeah, you know, that really was the potential. You could have got 35 points, but you know, we've covered this so many times, but I'll just never do one of these videos without at least covering it, because there may be one person that only watches one video, and for them not to hear it, well, that would be just as wrong as well, you follow me. Chances of you being available all of these hours, ready, willing, and able to take every one of these trades, that right there is a slim chance. Okay, but let's say you were, you took you some Dramamine, you got you some lattes, whatever, however you roll, and you said, man, I'm trading this baby every setup. Okay, how are you going to get every tick out of every move? See, that's a fantasy thing that gets floated before your eyes sometimes with websites and methodologies and stuff. You know what I'm talking about. If the market moves 2 points from point A to point B, it's really hard to get 2 points out of that move. Can you get a point and a half? Sure. Point and a quarter? Yeah. Can you get 2 points out of a 2-point move? It's very difficult. Okay, but I'm not going to beat that up. If you haven't heard me say it before, go back and listen to the other 10, 12 videos, however many there are. I've said it over and over and over. And I know those of you who've heard it each time, you may have grown tired of hearing it, but it's really something that you need to write on the tablet of your heart, because it's the truth. Okay? And anything other than the truth in trading is going to ultimately lead to your demise. So, alright, so if we are going to argue that although there actually was 35 points maximum potential in this day, Friday the 13th, but that the realism is that you couldn't actually get all those points, what do? Knock off 25%, 30%, 35, 40. Let's just take away half. Let's say you caught every trade, but you only got half as much as it was worth. Or let's say you caught, you know, half of the trades and you got them for 3/4 of what they were worth. I could make a pie chart, a graph. I could show you. I'm not going to do any of that. I'm just going to go 35 divided by 2. That's 17.5. Here, let's go. We'll spell it right. You ever wonder why there's no divided sign on a keyboard? I know you can do the slant, but it's not the same. Divided by 2 equals 17.5. Now, I'm pretty comfortable saying that it would be realistically possible for you to take 17.5 points out of this day if you were really working for it. If you had more than a 2-point goal, if you said, man, I'm just going to hang in there and I'm going to drink the lattes or do whatever it takes and I'm going to get the points. Okay. You know where I'm headed. 17.5 minus 9 equals 8.5 net. $8.5 point net. Okay. Now, the 4 losing trades, I rounded those up to make them worse than they would really have been. The trades that would have gone in your favor, I whacked those in half by 2 to arrive at 17.5. If I take 17.5 and subtract 9, I'm left with an 8.5 net. Is that a figure that I'm comfortable with telling you was actually possible and achievable? Good Lord, yes. Now, without using the other, this was without using all this information we had down here and additional information that we have via weekly trading zones, our dynamic support and resistance, all sorts of other things. I mean, let's face it, if you just took this trade here for 4.5 and you caught 3 out of that, and there's a 5.5 point trade, and let's say you caught 3 out of that, and let's say you caught this trade here that was 3 3/4 and you caught 3 points out of that, 3, 6, 9. You've already beat that and you only took 3 trades. But look at the time of day you were taking those trades. You were taking those trades at a time of day when it was favorable to be taking trades. Okay? I don't know how to explain it any better than that. Oh, I know what I can do. I can invite you to come and take a free trial. cfrn.net/apply. If you've taken a free trial in the past, you frittered it away, you didn't take it seriously, but now you're watching this video and you're going, oh man, I've just wasted a year. The guy tried to show me a legitimate way to trade the market, and I went off chasing rainbows, and man, I wish he would let me take another free trial. Okay. Send me an email, secondchance@cfrn.net. secondchance@cfrn.net, and I'll do exactly that. You know, give me at least one. You don't have to give me a paragraph. Give me one sentence as to why you didn't take good advantage of your free trial, or maybe you did and maybe you just didn't see it. And just say, you know, I took the trial and blah blah. Could I please have a second chance? And you know what? I'll contact our friends at Daniel's Trading. Not only will you get to hang out in the room with us, in the live trading room, and watch us trade live 2 hours a day for 5 consecutive trading days, 1 full week, but I will get our friends at Daniel's Trading to extend to you another week's free trial of the platform with all the indicators, with all the live data, with the simulator, the support, whole ball of wax. So if you've never taken the free trial, cfrn.net/apply. If you've taken the free trial, you'd really like to take it again, secondchance@cfrn.net. If you've already taken the trial, maybe you've even taken the second chance, and you realize that, you know what, I just need to become a partner. I need to become a part of a community of believers who trade for a living. That's my home. Then you need to become a partner. Send an email to support@cfrn.net, and we'll put you on the path to becoming a partner. Our prices are incredibly affordable. If price is an issue, then email me about that, and we have some creative ways to help you with the financial side of this. Okay? Not going to say any more about that. All I'm going to say is, if you're tired of chasing rainbows and holy grails that don't exist, you're willing to work for a living, and you really would like to be part of a community of believers who do trade for a living, then go ahead, send that email, support@cfrn.net. Have a great weekend, and I'll see you in the live trading room.